Before starting the proper presentation, I would like to first tell you how I'm privileged to get this opportunity to share with you some elements that could happen to be determinant factors in this new normal environment. Then thank all the people that helped make it happen. Today, the topic of my presentation will be mainly focused on pricing innovation and on how it will be key in the future to attain long-term profitability. In order to properly address this topic, here is the agenda that will drive my presentation. First, I will start by briefly going through the main levers that make the pricing process central in value generation. Then I will try to show how the COVID-19 crisis deeply transformed the conditions for insurance players, especially here in Africa. Afterwards, I will review the main levels of pricing sophistication identified and how much they can improve some key indicators monitored by P&C insurers. And finally, I will stress how important the role of the regulatory bodies is, and that in order to play this role, they need to equip with the accurate tools as well. First, in order to grasp the role of pricing in value generation, we have to look at the purpose of pricing. Proper pricing should guarantee both quotes related to the risk profile of the customers and guarantee the technical balances of the insurance carriers. Then, following these principles, enable insurers for a defined period of time, let's say calendar year, to cover with the premiums collected the future claims. And that's where actually the value generation process begins. But to do so, a proper pricing, there are some necessary requirements. And a proper pricing requires both internal and external data of quality. Internal data, that's quite obvious, but external data are sometimes underestimated, but they are key in the optimization of the price quotes, and we will see it later. Then the data. The data is an issue for every single insurer across the world, and especially here in Africa, where some regions suffer from a huge lack of it. And finally, proper pricing enables to get the right price for the right customer without crippling profitability. I would like to stress that by saying right price, I mean providing accurate prices that enables to attract and keep good risks and to get rid of the bad ones. Such strategy will contribute to current and future profitability by improving the quality of the portfolio. But all this is theory, and in real life, you have to face challenges, and we are currently going through one of the biggest crises we've ever seen and we've ever been through. And the players, the insurance players that will be hit the more strongly are undoubtedly the P&C insurers, due to the strong correlation that there is between GDP and GWP, which is growth written premium. And this is something that we can see on the graph on the right. What you see is what is called the S curve. And it has been identified by the Swiss Re Economic Research and Consulting, and highlights a correlation between the stage of development of a country and its penetration rate, insurance penetration rate. The more country is developed, the higher its penetration rate. And you see the circles, and the circles show also something. It shows that there are different slope inclinations, and between the two dashed lines, actually this is one type of slope inclination, and you have almost all the African countries. And this is something that shows that this is here that everything happened actually. But there's something that this graph doesn't show. It's that in many countries in Africa, only few insurances are mandatory. But in other countries, and for example, the one above in the right corner, for example, Germany or France, there are so many insurances that are mandatory. So I think that, and that's my opinion, with that crisis, the impact in the insurance sector in Africa could be way more important than in the other countries. So all the anticipations of GDP are very, very, very bad. And this is why I think that Africa will be strongly hit. There are some short-term things that can be done in order to enjoy renewed profitability, such as cost killing. But insurance players have to look beyond and try to get and to attain long-term profitability. And with cost killing, it's just impossible. Because also the rules are changing. Now the customers have high expectations in terms of services and products. For example, during the crisis in France, the customers wanted to have their premium reduced because of all the gains made by the insurers. This is just an example. Another point is that the size of the market will reduce, but the number of players will quite keep the same. So it will be a huge challenge, and the insurers will have to differentiate. So I think that in order to address these issues, pricing innovation seems to be a very good candidate. Now let's talk about the levels of pricing sophistication. The level of sophistication targeted by an insurance player depends on several things, actually three. The stage of the maturity of the market, and in this, it includes the penetration rate, the number of players, the accuracy of the regulation, but also, and of course, the level of competitiveness, which is very important. Then the resources of the insurance carriers involved, and finally, the availableness of the necessary data. And I've already said it, but this is really, really key and really important in Africa especially. So the first sophistication is generalized linear models, GLMs. I've called it the starting point of sophistication because this is the first one that I described, and it brings really something. This is a method that has been generalized around the globe, and especially in Western countries. And GLMs contribute to identify the main risk drivers of the insurance loss reducing variability, and creating meaningful rating structures. And this is very, very important. And another point, the next one, is the level of sophistication requires to hire people with the accurate skills. And it will be key as well, not only to have the tools, but to have the people to use these tools. And of course, it is used for all risk models and product types. Then we have the inclusion of the customer behavior in the calculation of the commercial premium. And it's very central because this is something that insurers look for, to have the sensitivity of customers to prices variations. And with the right tools, it's something that you can attain, that you can obtain, and it enables to get the right prices, just like I said some slides before, and it's very, very important. Then we have AI-based and machine learning pricing tool. This is, I've called it the fancy solution because this is something that we hear quite every day. And there is, it brings really something. It brings something, and it can be used in building complementary models to optimize commercial prices and scoring policyholders, some rates as well. And this is something that reduce dimensions of multiple level data sets, which can leverage existing GLMs. And which is what I would like to stress is that there are two main axes of sophistication: through methods, GLMs, AI, machine learning, and through acting on the chain of pricing by behavior analysis, for example. And the two last are actually chasing the inefficiency. Sometimes some insurers have products that are unprofitable and sometimes unused. And to get rid of this type of products can enable insurers to focus on others and to get better prices on other products. And this is a lever that should be operate when needed, actually. And the last point is an in-depth rethinking of the pricing process. And I think you have to think about where you can optimize and optimize at every chain of the pricing process in order to finally get the results that you want. On this tab, actually, you can see all the impact of the different levels of pricing sophistication on some indicators. And this is very important because it enables to show and to stress where the levels of pricing sophistication can really operate and act. For example, if I take the second column, customer behavior, I can see that the impact is positive on amount of premium for a new business, but as well on new business profitability. And the more important, because there are 3 pluses, it's on retention. And that's exactly what we want, actually. We want that. We want to propose to our customers the better prices. And with that, you can attract good prices, but you keep the good prices that you already have in your portfolio. And that's key. I wanted to talk a bit about pricing and regulation. I think that maybe what we should keep from this slide is that first, having the best pricing processes, tools, capabilities is not enough. Regulation must build a framework in which insurers can differentiate thanks to pricing, and it's so important to have a healthy competition among the players. But of course, and 3, all this framework should not forget that the main objective of the regulator is to regulate the market. And the role of the regulatory bodies will be even more important now because of the crisis. And maybe this is something that we should keep in mind, actually. Finally, I think that with this crisis, a lot of things are going to change, and the conditions of making insurance will not be the same anymore. Yet, thanks to the right pricing innovation that fits to the specificities of the insurers involved, long-term profitability can be attained. But pricing is just one block of a wider system to build in order to attain this expected profitability. Besides an accommodating regulatory framework, pricing innovation needs the following blocks to optimize profitability. First, an accurate underwriting strategy based on the use of advanced pricing tools and methods. And two, the right resources in terms of people and actuaries especially. To go further, some other methods that are not directly linked to pricing can help optimizing profitability. Fraud detection with the use of AI, expenses allocation, or portfolio cleaning when it's authorized by the regulation. And such sophisticated pricing tools are often provided with the necessary individualized support, a step-by-step approach which enables to choose the accurate level of sophistication. Thank you for your attention, and I hope that this presentation will bring something to these discussions, and that it will help to understand and grasp the importance of pricing innovation in generate value for P&C insurers. Thank you for your attention.